Hey, welcome back to YT Finance, and today we are talking about Palantir Technologies, Sofi Technologies, and Tesla stock. In the first article we will be analyzing, it's titled, "This digital bank stock has 42% upside according to Wall Street," and clearly they are referring to Sofi Technologies. After that, we'll be analyzing the latest news updates and price targets for Sofi Technologies before we move on to talk about Palantir Technologies and how they have recently landed a new contract with the US Special Ops. This should increase their overall share price, and on top of this we will be going over their approaching catalysts to see how high this company could go in their overall share price. We'll also be analyzing a more bearish article regarding 3 things that smart investors into Palantir Technologies should already know, and then we'll talk about the fair value price targets and price predictions regarding this company after we perform our analysis and go over their latest news update. Lastly, we'll round out the video talking about Tesla's TSLA shares by diving into an article which outlines how Tesla has a new profitable revenue stream which is going to help the overall company as well as their overall share price. Naturally, we will also be going over the latest news updates, price targets, catalysts, and forecasts for this company as well. So for more news updates on Tesla stock, Palantir Technologies, or Sofi Technologies, don't forget to go and annihilate that like button right now. Go ahead, go down and press that right now. Click or tap it because it helps me out so much, especially if you want more videos on any of these companies. Make sure to subscribe if you are new so you're notified to stay in the know about each and every one of these companies. Also become a member of this channel by clicking or tapping that join button right next to the subscribe button so you can support me personally to get secret videos about the current companies and stocks that I am buying, and you can do this for as little as 99 cents, so you literally won't even feel it. But with that being said, I say let's dive into our first Sofi Technologies article. Sofi stock has been performing very well lately because it's up more than 52% since the beginning of 2023. However, some investors believe that they have missed the overall boat on this company, but I'm here to put you at ease because this rally may not be over yet. There are new positive catalysts that are coming up for this company, meaning that the share price could go even higher than it is right now, despite them already surging by around 52%. And I'm not the only one that thinks this. Wall Street analysts, professionals, and experts who have performed analysis on this company also agree that there is further upside potential. Currently, Sofi stock, which is a digital bank, currently trades for $7.27. However, very bullish positive analysts believe the company could surge up to $10 over the next 12 months, while more bearish negative analysts believe this company could fall between $2.50 and $3. Now, I personally think this company is actually worth around $8, so we're almost at my overall fair value price target for this company. But despite that, we are anticipated for all of these price targets and price predictions to increase after their approaching catalysts. And we can already see that investors are getting excited because the share price is already on a huge uptrend. So we're going to discuss just how long this could be and when we could anticipate a pullback in their overall share price. So far, the company has performed very well, giving investors a very strong growth in their overall members and revenues. Sofi originally had around 2.3 million customers in the first quarter of 2021. Then these metrics ballooned up to 5.6 million customers recently as of their most recent earnings report. And by bringing in new customers, this is positively impacting their other financial metrics. But the stock is surging for more reasons than just their member growth. Right now, the company is surging in their overall share price because Wall Street has a bullish positive narrative surrounding Sofi Technologies, especially as Sofi Technologies is headed back to their roots where they were originally a student loan refinancer, and that was their main core business. Right now they have 3 business segments. However, their lending segment is by far the most lucrative and it brings them in the most revenue. To put this into perspective, back in 2019, the company had student loan originations and refinances that numbered around $6.7 million. However, after the student loan freeze, this de-incentivized former students or just students in general to refinance their loans because their federal loans were not accruing interest and they didn't have to be paid upon, which lowered their overall student loan originations down to 2.2 million. So clearly this particular segment of their lending business did take a large hit, but now investors are getting excited because this revenue stream is about to open back up. At least at the time of writing, the student loan payment moratorium or the student loan payment freeze is poised to end as a part of the debt ceiling deal, which is currently working its way through Congress. As of Friday, the Senate cleared the debt ceiling bill with 63 votes in favor of this bill and 36 votes against it. The current debt ceiling deal would terminate the student loan moratorium, which is the student loan payment pause, and repayments will resume on August 29th, 2023 if this agreement officially goes 100% through. And once the student loan moratorium does end, this will increase the overall demand for SoFi's refinancing business, making them an even more lucrative company overall, and this is why investors are very excited. From my perspective on this, I think that this is very good, and the share price most certainly will continue to go up as we approach this catalyst. As long as SoFi Technologies remains fiscally responsible financially and fundamentally, investors should be rewarded for their overall growth. They are rapidly obtaining members, and this gives them the opportunity to cross-sell or upsell these members on other products. For instance, if somebody comes in just to refinance their student loan at a cheaper interest rate, SoFi will use this as an opportunity to market to that person other SoFi products and or services such as a checking account, a savings account, a credit card, and many other things they offer. Currently, Wall Street has a price target, like we said earlier, of $10 per share, representing 42% further upside in this stock over the next 12 months, which is very positive for current investors. I also suspect that analysts professionals as well as experts will reevaluate their price targets once the student loan moratorium and the student loan freeze ends, of a larger rally. But be careful, after an initial increase in a share price, we can anticipate eventually a pullback will follow. So you can either wait for the pullback and then invest at a cheaper price, or you can use this as an opportunity to trade off the volatility of the stock while it's trending upwards. Next, let's talk about Palantir's PLTR stock in regards to how Palantir Technologies recently landed a contract with the US Special Ops. And this is a huge contract, which is very positive for Palantir Technologies, which has already been surging at a very aggressive pace regarding their overall PLTR stock price. Palantir has been a hot topic among traders and investors, especially now that they have landed this new contract with the USSOCOM. This contract is a multi-year contract worth $463 million, which will allow Palantir to provide technology solutions as well as data mining and data analytics capabilities, which will allow their management to make data-driven decisions. The president of Palantir USG even commented about this new contract by saying, and I quote, "Our partnership is an example of converting software innovation into real battlefield advantage. USSOCOM is at the forefront of adopting leading-edge technology. Just as they are the pointy end of the spear on the battlefield, they often find themselves playing at the same role in innovation," end quote. So this is a very positive catalyst for Palantir Technologies, and I anticipate this will reflect pretty positively in their overall share price, which is already up more than 129.4% year to date. In previous videos, we actually predicted that SoFi stock would surge based off of very similar contracts and upcoming catalysts for this company, but since it surged so much, this company inevitably will pull back, and a little later we'll go over their price targets as well as their fair value estimate, which is what I personally gravitate towards. Now let's do a quick analysis of a bearish negative article, because I want you to be informed of the bearish and bullish side of this company so you can make an informed decision concerning the positive and negative aspects of this overall stock and company. Palantir Technologies, if you didn't already know, is a big data and analytics company that serves both commercial enterprises as well as government clients. And according to the most recent earnings report, Palantir generated 45% of their revenue from government clients. They have two main segments, government and commercial. So a large portion of their overall revenues do come from government clients, but like I successfully predicted, the majority of their revenue in their future is going to come from commercial enterprises. The number one risk that this author points out about this company is how other government agencies are creating their own platforms to replace Palantir. Essentially, this started back when the Immigration and Customs Enforcement Agency, or ICE agency, started to develop their own data mining platform, which is set to replace Palantir's capability, meaning that they will no longer have a need for Palantir's Gotham platform. If other government agencies also try to make in-house software to replace Palantir Technologies, this could negatively impact their government business, which could gradually crumble. However, I do think this is somewhat of a slippery slope fallacy in the sense of, even if ICE is doing this, that does not necessarily mean that all government agencies are going to follow suit. And also, Palantir's technology is extremely sticky, meaning that once you start to use Palantir's technology, it's going to be hard to get rid of them because they are so integrated regarding the other tools that the government is using. So I really don't think that this is a large negative talking point, and we've known about ICE replacing Palantir's technology for quite a while, and even during that time, other agencies have not done a similar move. Right now, the PLTR stock price trades for $15.12, while bullish positive analysts believe the company could maintain a $15 price target over the next 12 months, while more bearish negative investors believe this company could fall below $5. Another problem that this author points out is their SPAC deals, which should raise a few eyebrows according to this author. In between the years of 2021 and 2022, Palantir Technologies invested more than $400 million into 20 startup companies, which merged with special purpose acquisition companies to be listed on the stock market. Each of those investments were between the ranges of $10 million to $40 million. So Palantir is investing into these startup companies because startup companies need capital to grow further. Originally, Palantir wanted to do this because they believed that these emerging companies could be the next large cap companies over the next few decades, so this is a very long-term play. However, of those companies, a contract was signed saying that they have to use Palantir's overall technology. So Palantir is going to make them dependent on Palantir's own platforms, which is a very smart business move. This then led to Palantir securing more than $700 million in the form of contracts with these new SPAC startup companies. However, this strategy seems short-sighted according to critics because Palantir essentially is inadvertently turning their own cash into revenue through a risky investment. So if you see how that works, Palantir is giving millions of dollars to these companies, so they are offloading cash and investing into these companies, and Palantir has loads of cash on their balance sheet, well over $1 billion, so clearly they could make a move such as this, and then in return, those startup companies have to pay back Palantir Technologies over time for using Palantir's software. So essentially, Palantir is using their own cash to then circulate back in the form of revenue. However, I think that critics are missing this point, and it's between the cash that Palantir spent as well as the revenue that they got back. If you've noticed, they only spent $400 million worth of cash, but they got back in revenue around $700 million, or will get back that money over the long term. So I think this was a very impressive, good business move, and I disagree with the critics on that overall analysis. If anything, Palantir had the money to burn and spend on this risky investment, and they almost doubled their money. So it's not like they are just trying to pull one over on investors by converting cash into revenue. They actually almost doubled the amount of cash in return for their investment, and to me, that is a very wise investment. Lastly, the author points out that Palantir's newer platforms, such as Apollo and their AIP platform, will eventually lead to an increase in their overall share price, and I do 100% agree with that because artificial intelligence is a very hot topic right now. Now let's talk about Palantir's fair value estimate regarding if investors should buy, sell, or hold Palantir Technologies. So let's take a look at their fair value. Palantir right now, in my opinion, is overvalued because of the recent surge in their overall share price, because they are up over 120% since the beginning of the year. However, after we perform our analysis, the fair value estimate, according to various models in Morningstar, comes out at around $9 per share. So by this analysis, Palantir stock is overvalued right now according to their fair value estimate. Now, this doesn't mean that it can't go higher in the short term. It most certainly can, but eventually the share price will pull back once this artificial intelligence and AI hype starts to decrease in the overall markets. On top of that, Morningstar as well as myself project that Palantir will grow their revenues at around a 22.5% compounding annual growth rate over the next 5 years, which is very impressive in my opinion. So depending on how long you want to hold this company, it should dictate what you actually do with this overall stock, but in the meantime, I do think that this company is somewhat overvalued, and I would wait for a pullback if you are a long-term investor, but if you are a stock trader, then feel free to buy now, ride that momentum up, and then sell high before it pulls back. But again, that is going to be dependent on your personal strategy and your own risk tolerance, so always make sure to do your own research. Lastly, let's talk about Tesla's TSLA stock and how they have unlocked a new profitable revenue stream. In a previous video, we discussed how Tesla is starting to work together with Ford regarding how Ford can now use Tesla's supercharger network to charge their electric vehicles. Tesla created the North American Charging Standard, also known as the NACS, which it uses on all of their vehicles and all of their charging stations throughout the United States and Canada, so specifically North America. However, many of Tesla's competition and competitors are using and creating a different design called the Combined Charging System, or CCS. And right now, both of these networking systems are trying to fight to become the industry standard. However, Tesla has sold more vehicles than their competition in terms of electric vehicles, and they are still ramping up production, which could tell us that Tesla could win as the new standard, because if the majority of cars can't use the other combined charging systems or the CCS, they're going to have to use Tesla's NACS, meaning that Tesla could win this charging station network war, forcing other competitors to use their charging stations. Currently, the TSLA stock price trades for $216, but analysts believe it could surge up to $280 by the end of the year, while other analysts believe it's only worth around $180. For me personally, I have a $250 price target for Tesla's TSLA shares, so clearly there's still upside potential for this overall company. On top of that, since Tesla has now created a partnership with Ford to allow Ford electric vehicles to be compatible with Tesla's NACS charging network, this again allows Tesla to become the new industry standard. Now, this is going to act as a double-edged sword because it is going to increase the line at various Tesla superchargers and charging stations, which is inconvenient for Tesla owners if they actually own an electric vehicle. However, from a company perspective, it's great for Tesla because they are going to be making money off of their competition's cars, which is a very wise move. But what should investors do with the overall share price of Tesla? According to this article, the author says right now is not the best time to buy, but shares are up around 66% since January. Tesla seems to be feeling the impact of a slowing economy, while analysts are lowering their expectations for earnings growth and other key factors. So the author is advocating for a pullback and then to invest into this overall company, and that would give you the best buying opportunity. With that being said, I would love to hear your opinions and your thoughts down below in the comments about Tesla stock, Palantir Technologies, and Sofi Stock. Don't forget to go and annihilate that like button if you made it all the way to the end of this video. Subscribe if you are new for more videos just like this one, and don't forget to become a member because it helps me out a ton. With that being said, I will see you in the next YT video.